In fact, let's connect with Abhishek Goenka. He is founder and CEO IFA Global, who's with us to talk a little bit more about where the currency is headed as well as the external pressures that we're seeing. Thank you for taking time out and joining in. Now, what is your assessment as to what the rupee at elevated levels of 70 does for the overall Indian economy? We understand that it could potentially push up inflation. It's going to now put more pressure on the government finances. Remember, the oil import bill as well continues to remain on the rise. What is your view?
So obviously, I think the points you mentioned are very, very valid, and obviously this is going to be the repercussions in the market. But at the same time, what's going to happen right now is, the importers which are there in the market are really in a panicky mode, and they all are waiting for the corrections, which likely is not happening in the market, and possibly because of the NDF markets. The markets are clearly going up when the markets in India are closed, like yesterday. The markets went up all the way till 70 in the NDF, when there was a mayhem across emerging market currencies and stock markets. So I think if this kind of a situation continues, rupee is likely to remain weak. And these small information which is coming right now, in terms of 15 billion bailout in Turkey, or the Chinese having a US trade talk, and because of which the Chinese was also corrected. I think these are more giving breathers to the currency, but overall I think the speculators are going long on every dip in the market. With regards to the Indian economy, what I feel is that, of course, as I mentioned earlier, in terms of real effective exchange rates, I think rupee was overvalued. It didn't depreciate the way it should have depreciated over the last 4 years, looking at the inflation. And now I think it's coming to the mean, and if other emerging market currencies and Asian currencies are depreciating, then I think there is no point of keeping the rupee artificially overvalued, because historically we have seen it in case of Swiss franc earlier, when the government have tried to keep the currency very, very strong. When it it breaks those levels, it evaporated like 20-25% overnight. So I don't think that we should intervene aggressively. Yeah, intraday volatility intervention is fine, but if the other currencies are depreciating, the dollar index has been going up, I think it's fine.
Okay, Abhishek.
Is good.
Abhishek, I take your point. At this point of time, perhaps the RBI does not need to excessively intervene. And up until now, we had been attributing the reason for the fall in the rupee, and perhaps rightly so, to global factors, to the dollar, to what's happening in Turkey, so on and so forth. But with the CAD data that did not, point to any improvement in macros as such, and I know it's just one frequent economic indicator because inflation pointed otherwise. But yeah, with this trade deficit only widening for the month of July, and of course the oil import bill only increasing, like Avan as well mentioned, do you think that perhaps India's macros may be taking a turn for perhaps the worse, and hence the rupee at 70, like you said, it was a bit undervalued as well, overvalued, pardon me, as well. So perhaps 70 is a fair amount, a fair value rather for the rupee versus the dollar?
Ideally, I think 70 is also a number which is a little overvalued, because actually the number should be close to around 72, 73. So I have a feeling that, of course, in terms of macroeconomics, things have definitely deteriorated. In terms of the numbers you are seeing, if these kind of numbers keep on going, we could hit 3% instead of 2.5% in terms of trade deficit, which is again alarming. Oil prices had subsided yesterday, because of which you are seeing this figure in the rupee at 70, 25. Otherwise the market could have gone up to 70, 50 plus today. And I think most of the things done on oil for us as India. So if oil doesn't come down, we are definitely going to have big deficit numbers coming in going forward, and this is ultimately going to impact the stock markets and the rupee both. I think the savior for us is also the stock markets. The Nifty has not been going down vis-a-vis other emerging markets, which is on the cups of a bear market. Look at any other emerging market. It's been going down like crazy. But I think if Nifty starts correcting, then obviously it will be a double whammy for India, and then we're going to see further outflows happening. Having said that, I think if we see levels of 73, 75 levels in the dollar rupee, then I think again Indian markets would get lucrative with the 10-year going up, and if the currency is already say 13-15% higher from the current levels, I mean from the 64 levels which saw the the lowest point some time back, then I think the investors might get interested again, because then the carry starts getting into favor again, and also the currency will be around say 12-15% higher, then they would start getting interested again. So I think what we need to understand is, yes, we are on a bear trend when it comes to the rupee, and exporters at this point of time have very interesting structures in the market, cost reduction structures like 70
Right.
to 76 range mode, which they can enter and they
Sure.
can protect themselves.
Thanks very much, Abhishek, for giving us a fairly grim outlook on the currency and where it's headed. That continues to remain the big talking point, 70.16 to the USD. Right back to the markets then, and Manas Jaiswal and Abhishek Maheshwari with us.